Let's be honest, talking about long-term care isn't exactly a fun topic, but it's so important to plan for. So today, we are going to break down CareShield Life, what it is, how it works, and what it means for you. It's the national safety net that every single Singaporean needs to understand. All right, let's get into it.
Let's just start with a number, a statistic that really puts this whole conversation into perspective. 1 in 2.
What does that even mean? It means that if you take 2 healthy 65-year-olds in Singapore right now, one of them is likely to experience a severe disability at some point. This isn't some rare, far-off possibility. It's a 50-50 chance. And that right there is why CareShield Life exists.
So what is it exactly? The easiest way to think about it is like a national insurance plan for long-term care. It's run by the government, and its whole purpose is to give you monthly cash payouts for the rest of your life if you become severely disabled. It's there to help you handle those ongoing costs for personal and medical care.
Okay, so the first question on most people's minds is probably, does this actually apply to me? It's a great question. So let's look at exactly who is covered and when that coverage actually starts.
Well, it all depends on when you were born. It's actually pretty simple. If you were born in 1980 or later, it's mandatory. You're automatically enrolled when you turn 30. No ifs, ands, or buts. Now, if you were born in 1979 or earlier, it's optional. You can choose to join. Many people in this group were actually auto-enrolled from the older ElderShield scheme, and that window to opt out is now closed.
And the coverage itself is, well, it's really broad, which is fantastic news. It covers all Singapore citizens and permanent residents. And this next part is absolutely crucial. It covers you even if you have pre-existing conditions. Plus, the coverage is worldwide. So if you decide to live overseas, you're still covered and you can still make a claim.
All right, let's get to the part everyone really wants to know about, the money. How much does this thing cost? And maybe more importantly, how much do you actually get back if you need it?
So, for anyone who needs to make a new claim in 2025, the monthly payout starts at $662. This isn't a voucher or a credit. It's cash, paid right into your bank account. And that gives you the flexibility to use it for whatever you need, whether that's hiring a caregiver, paying for nursing services, or making your home more accessible.
Now, here's a really important detail. That payout amount isn't just frozen in time. It's designed to grow with you. Right now, it goes up by 2% every year. But get this, starting in 2026, that growth rate is set to double to 4% a year. So what does that mean? It means someone who needs to claim in 2030 will get a much higher monthly payout, projected to be around $806, which will help a lot with rising costs.
Okay, so what about the other side of the coin, the cost? For a 30-year-old male, the premiums start from just $206 a year. And just like the payouts, your premiums will go up by a little bit each year until you turn 67. After that, you stop paying completely, but you stay covered for the rest of your life.
And to make sure this is affordable for everyone, the government has built in some pretty significant subsidies for citizens. It's means-tested, which basically means your income determines how much help you get. As you can see, lower-income households get the most support, with premium discounts up to 30%. It's all designed to make sure nobody gets left behind.
And here is the key takeaway, the most important thing to remember about paying for this. You can pay for your premiums 100% using the money in your MediSave account. You don't have to fork out any cash. The government has made it crystal clear. Nobody will lose their CareShield Life coverage just because they can't afford the premiums. There are safety nets in place.
Okay, we've talked about who's covered and what it costs, but what happens if you actually need to use it? Let's walk through what the claim process looks like.
So, the trigger for all of this, the thing that lets you start receiving payouts, is a diagnosis of severe disability. Now, that's not a vague term. It has a very specific definition. It means you are unable to do at least 3 of the 6 essential activities of daily living, or ADLs, all on your own. So what are these activities?
Here they are. These are the 6 fundamental tasks that most of us just do every day without even thinking about it. Washing ourselves, getting dressed, feeding ourselves, using the toilet, walking or moving around, and transferring, like from a bed to a chair. To be eligible for CareShield Life payouts, an accredited assessor needs to certify that you require help with at least 3 of these 6 things.
The good news is, the process itself has been designed to be as simple as possible. It really boils down to 3 main steps. First, you need to get an assessment done by a professional who's accredited by the Ministry of Health, and hey, the fee for your very first assessment is waived. Second, the assessor will usually submit the results for you so you don't have to worry about the paperwork. And third, once your claim is approved, the monthly payouts start coming in.
So now you understand the basics of how it all works. Let's talk about the final piece of this puzzle, how to think about this in your own personal financial plan and what your options are from here.
Now, many of you might remember the older scheme, ElderShield, and when you put it side by side with CareShield Life, you can really see what a massive upgrade this new scheme is. I mean, just look at the payout duration. CareShield Life is for a lifetime. ElderShield was capped at just 6 years. That difference is huge because long-term care needs can often go on for much longer than 6 years.
And that brings us to a really important personal question, one that only you can answer. The basic payout from CareShield Life provides a solid foundation, a safety net. But you have to ask yourself, in my own personal situation, would about $600, $700, or $800 a month be enough to cover my needs?
If you're thinking that might not be enough, you have options. Private insurers offer what are called supplementary plans. These sit on top of CareShield Life and can boost your monthly payouts significantly. Some of them even kick in for a less severe disability, like if you can't do just 2 of the 6 ADLs. And you can even use up to $600 a year from your MediSave to pay for these supplement plans. So, what is your next step? The single best thing you can do right now is get familiar with your own policy. You can see everything, your personal coverage details, your exact premium, what subsidies you're getting, by logging into the official CareShield Life website with your SingPass. It takes just a couple of minutes. At the end of the day, CareShield Life is a really powerful safety net. It makes sure that every single Singaporean has a baseline of protection for long-term care. And that's an incredible thing. It's a foundational piece of the puzzle. So the real question it leaves us with is this. Now that your safety net is in place, is the rest of your long-term plan ready?